Good evening, everyone. We want to welcome you all to another episode of the Black Market Podcast. I am one of your co-hosts, AC, also known as the Market Oracle.
You already know who this is. This is the market prodigy. And boy, did we have a market today.
Hey,
Woo.
we did have a market today. I'm not gonna lie, we had one.
This right here, this was something that I've been waiting on, but like, oh my God, like if this is like your first cycle of being in the market, your first season, then you might not know really what's going on or really understand the significance of what's going on. But this market, boy, it's been crazy. You know, I was looking at my screen. I was looking at the Nasdaq yesterday. I was like, man, we had a terrible week. So like this weekend, I looked to see really how bad of a week did we really have. Can I show my screen real
Go
quick?
ahead, man. Show your screen. Let's see what you got. Let's see what you
Oh
got,
my
man.
goodness, this right here was crazy.
Okay, what we got right here?
Can you see this?
I got you. I can see it.
Oh my goodness. So I'm looking at the Nasdaq, the index that I look for. So I'm like, man, this was like a real bloody week. So I have to go all the way back. This is on the weekly chart, going back what is this? Yeah, 3 years. This week that we just had. Look at this red bar. We have not had a week this bad. I mean, I'm looking at it. You could say we had a bad week around the end of December.
Yeah,
This past Christmas, like right before Christmas, that
yeah.
week of Christmas. But this one right here, going back and looking at it, I'm even going back to COVID, and you can see COVID right here on this dip right here when it came down and touched that 200-day moving average. That first week where COVID hit, that was a bad week. But really, last week was worse than the first week of COVID when it dipped.
You got to think about it, man. Those interest rates are killing them. You remember
Woo.
that's what we talked about. When it comes to these growth stocks are going to take the biggest hits because
Oh my
they're
goodness.
so aggressive with their schedule for interest rate hikes. Like they went from 3 to 4 this year. So that right there alone is telling you like, okay, something is going on because for them to be that aggressive, it has to be something going on. And we all know what it is the inflation and all this other stuff, the supply chain constraints and all this that got brought up by COVID. It's a lot of things that COVID messed up, and because of everybody trying to rebound, the demand is so high for certain things that, inflation is going up crazy. You got used cars going crazy, you got the houses going crazy, semiconductors going crazy, gas prices going crazy. Everything is going crazy. You know what I'm saying? So
It's a
all of
lot
this
going
is going
on.
into pretty much why we are seeing this big drawback like this now. Because I
And
mean,
then
hey, it makes so much sense.
and then we got another headache on our hands right now with Russia and Ukraine. Like we
Yeah,
on the brink of war, and most people
exactly.
don't even know it right now.
Exactly.
Don't
Yeah.
even know it.
Cause right now
That
they just put out the alert today that was telling the US citizens and the embassy and all
yeah,
that to go ahead and get out of Ukraine because Russia can attack at any time. And I mean, that's a volatile situation right there. And then when you're talking about Russia, that's also talking about OPEC because they're part of that OPEC plus.
right.
So, I mean, they're not the biggest producer, but um, according to how the U.S. has started to open up their chains, their channels of oil, we're the biggest producers right now. But I mean, OPEC is definitely they can take over like nothing.
Yeah, we know about that war effort, man. You go back
Yeah,
to World War I and World War II, man, huge financial contributions going to be made with this. And I mean, you're right, it's going to drive oil prices, it's going to drive a lot of things.
yeah.
But the last thing I want to show that I got right here, this is my daily chart. I drew this up before the market started this morning. I got excited because I looked at my daily chart. right here. And I was like, man, if it bounces, and it scared me. Now me and you, we can see this, and we know that this is a beautiful hammer right here, where we see it dipped all the way down to about $334 before rebounding. And this is where I drew exactly where I drew my line right here around that 345 mark before it started to rally today. Man, right before I'll go ahead and stop presenting. Man, right before the market closed today, I'm gonna cross my fingers, but I saw some stuff happening after lunchtime. I was like,
Okay.
"Whoa, my goodness!" I knew when it was tanking early this morning that it was trying to get to that point that I drew up. I I I cleared out my whole account or whatever, and just sat there and waited and waited and waited. Where I put down about 200 shares on XP, and then I even dropped some option contracts on Neo.
Mm.
So I bought some calls. So hopefully if this isn't a false move or whatever, because I know that it's probably gonna go up, but like you said, a long time ago, the market is like a train, a big train, freight train. It cannot stop on a dime.
Mm-mm.
It's not. It's been going down like this for it's been in a downward projection since the beginning of the year. And I'll say really December 31st. It's been going down since then.
Now, this is what I'm looking at. I'm hoping that the Nasdaq, that we don't necessarily see, um it could get nasty. I'll say that. It could get ugly, it could get nasty. Because
Yeah,
the thing
if it
is,
broke
because we're
it
going
break this
into
point.
this, yeah, because we're going into this cycle of, higher interest rates, and on that, just that verge of going up, it is some opportunities out here. No, it's definitely opportunities out here everywhere. But one thing that I would say is all this stuff, all this tech, all this Tesla, and all this other stuff that people love to mess around with, and Apple and Google, you might as well wrap that up right now. That is dead right now. Like,
Oh
do
yeah.
not. My advice is to stop messing with that stuff unless you're going to be trying to short it. I'm not saying go out here and just take the blind short. Don't just go out here and just short it either, because it
Mhm.
is volatile. It's going to move up and down. Don't just take the blind short. But what I am suggesting is to just leave it alone, because what we're going to see is a massive outflow, because a lot of people don't understand what a bear market looks like. They're going to
Mhm.
see that move down, and then they're going to see that bounce that we're talking
Well,
about.
tell them how they know when we're in a bear market. What does a bear market look like?
So, bear market, they consider the bear market to be once you're below 20%.
Mhm.
So, it's beyond pullback and it's beyond correction. Pullback is from
Because
like 5 to 10%. You
the
got
last week
pull
we hit
correction.
that correction
Yeah.
status right there.
Yeah,
Whew.
correction status is like 10 to roughly 20, and once you get over 20, then you're in bear market status. Now the thing is, what we're going to start seeing is you could see that bounce and it'll go higher. But the thing is, you won't break that high. So it's either going to make a double top, or it's just not going to get that high again, and it's going to start making a downtrend, and you'll start seeing maybe a channel form. That's what I'm hoping that does not happen, but could possibly go ahead and happen, just because of the simple fact that we having higher interest rates, and that's going to hit everybody's bottom line. The whole purpose of a growth stock is to grow exponentially fast, because that's what you are. You're a growth stock. So when you can't grow exponentially fast because money isn't cheap anymore, or as cheap as it was, that hits your bottom line. If you hit your bottom line, it defeats the purpose of you being a growth stock now, because you're not growing at the exponential rate that you were growing at before. So now there's no reason for me to put all this money in you. So now you're about to start correcting.
Right. I mean, the valuation of your company is based on projections, not
Exactly.
actual. numbers. So
Exactly.
the things like your materials and other stuff like those, um, like products and services like Clorox and stuff like that. Those things right there, they're constants like Coca-Cola and your industrials and stuff like that. But these things, like, these are based on numbers that they've said in an earnings call that, hey, that we expect to hit. So people want to jump in there early and buy and wait, like you said, and it's going to have that exponential move, and they just want
Hmm.
to get in on the front of it. But they could be 2 years away from that. They could say,
Exactly.
hey, we expected to hit this number, and then, oh, guess what? All of a sudden, COVID hit. Oh, guess what? The United States just went to war with Russia. Oh, we thought we was done with the Delta variant. Now we got Omicron, and now everything is shutting down. It's a domino effect. We got a pipeline that just burst open, and everything is going down. Like,
And there's
you,
so many more things that could happen that has not happened.
yep,
It's so many things that could happen. Too many things. And because of that, you open up Pandora's box, and it's just a plethora of things that can happen that could really screw up a lot of different things. Because I mean, we already know that the housing market is on a huge bubble right now. It's
I was
off
just
of a
talking
lot of
about that.
borrowed
Yeah.
money. Now, one metric that I don't know that I do want to see if I can do a little bit of research on is how many people have variable mortgage rates. Because if it's a lot of people that have variable mortgage rates, we are going to see even more foreclosures.
Boy, and
Because
you
the thing is,
imagine,
you got to
yeah,
understand
you
that,
imagine, yeah, you was in with like a 3% or something like that, and then all of a sudden that thing go from 3% to 4%, four and a
yeah,
half percent, and then you go from a $1,500 a month mortgage to
exactly. Yeah,
$2,500. That's what's gonna happen. You
exactly.
like, I ain't budget for this. This ain't never happened before.
Exactly.
Hey,
And see,
you
the
roll the
thing
dice.
is, people get the variables because the interest rates are so cheap. And
Hmm.
the lender, if
Until
they're
then, they're not.
slight handed enough, they're going to try to go ahead and get you into this because it's such a low rate.
Oh yeah.
Knowing that, yeah, we may give you this super low rate now, but in the future, the rates will go up and we'll be able to capitalize a little bit on the back end and make up all the money that we didn't make on the front end. I mean, it's a simple strategy, it's a wolf strategy. But at the same time,
Yeah.
if you don't really know what you're doing, you just out here just hoping and you just want a house so bad that you're just jumping out. I mean, that was one reason why I was telling a lot of people to just hold out because I mean, we did start seeing prices retreat. I started seeing a lot more houses that I would want to purchase pop up
Yeah.
rather than when I was looking in the summer of last year. It was ridiculous.
Housing market is just crazy,
Yeah.
crazy. Like, I was just talking to a realtor that helped me out. He was calling me, telling me like it's crazy. Like, my house value is going up over 100K in less than 2 years.
Yeah.
But then you turn around and you look at that, and then the rental rates have gone up. Houses are up. Like something that you would have paid 200K for might be 250K, might be 300K,
Yeah.
but it's like a small house. It's like we trying to buy small houses in like New York or something like that.
Exactly.
It's just everything is just up with inflation and everything, and the interest rates are actually still pretty low right now. So what happens when you got these housing rates? Because the supply is down right now, so the prices are up, and then when the interest rates start going up, you're really not going to be able to get into a house.
And one thing that I was looking at too was the fact that the supply it bottomed out in like September, October, maybe even November of last year. I think it was like September, October of last year. It
Mhm.
finally bottomed out from 2020 all the way to like the end, we're going to say right around end of quarter 3, beginning of quarter 4. That is when the supply finally kind of like topped off and like, stopped dropping. And then you start seeing an uptick. What that
Yeah.
means is, we will start seeing lower prices, but it takes time for that stuff because that
Mhm.
house is gonna have to sit there for days now. Because we already knew that back in July, I think it was back in July when they stopped the new construction homes. They had stopped
Yeah.
getting bought as fast. Like that had already slowed down.
Yeah,
So
and
now
that's
it's
like
starting to
looking
hit.
at the market.
Yeah,
We knew about that. Me and you knew about that from the material shortages and
yeah,
everything, and then the stuff like the raw materials, like the wood and the
yeah,
steel and the aluminum and all that stuff. When those building materials went up, the cost to build a house went up as well. So people just stop halting them because that went in on their bottom line and it affected their profit margins.
yeah.
Then they have to turn around and jack up the price just so they can keep their profit margins.
Exactly. And people aren't buying that anymore. So like new homes, like it's a lot of new homes, new construction. You can find plenty of new construction out there right now. Like they are not selling out like they were. Plenty of new construction out there now. So
Mm-hmm.
that right there being said, then you got some builders. I saw like DR Horton. I'm not sure exactly where, but or what subdivision this was, but you know they build a lot of homes
Oh yeah.
and huge home builder, but they were getting fined because they weren't building it up to certain standards at certain places. So
Mm.
I mean, you got certain things like that going on, and so now is it because
It's
of the
that profit
shortage?
more than they cutting
Yeah,
them
they're
corners.
trying to cut corners
we
because they
we
don't
ain't
want to
got
use the
better.
premium stuff. Exactly, they don't want to
We
use the
gonna use
premium
two by
stuff.
twos because instead of the 2x4s or
Yeah,
the 2x6s that we used to do.
exactly. Or they're using plywood where they supposed to have real wood or something. You know what I'm
Uh,
saying? So now your house finna blow over. You finna have the wolf and the three pigs, man. He finna come
hey,
huff and puff
F
and blow your house over.
F1 tornado come through, not a two
Psh,
or a
man, you
three
don't
or a
even need
four.
a F1 tornado, man. You just need a car to drive by too fast. Let the fire truck come by too fast, man. It's over with. Your house gone.
And then your insurance gonna go up when you do a claim.
They gonna say, "What happened, man? My house just blew." Hey, but I mean, that's really what's going on out here. It's like people are really trying to cut corners, and when they cut those corners, I mean, hey, people are really getting hit. So I mean, it's kind of hard out here now. The only thing I can
It
say
is.
is get in on something that's actually going to appreciate. Get in on the stocks that are actually going to go up when the economy is going
Mhm.
up. Because just because the interest rates are going up, that's not a bad thing in a sense. That means that the economy is growing at such a rate that we're having to raise our interest rates to slow it down. Because you don't want to have your economy lagging, but you also can't have it running hot. You can't have it running overheating. Because in that case,
Nah.
then inflation gets out the crazy. A lot of things go on, and now you're out here. We thought we was paying a lot now, and it's gonna get even crazier just because. And so you have to have like different tools to curb that stuff. So that's why we're raising the interest rates. You raise the interest rates, you slow the economy down a little bit. Supposed to slow the inflation and all that stuff down. So of course, things are gonna have to go back down cheaper because people aren't gonna be able to buy anything. Yeah, it puts people in binds, it puts people in predicaments that they don't want to be in. But hey, that's what type of society we live in because we introduce credit, boom or bust cycles, and right now we're in a bust cycle because we boom too hard.
Boy, man, I was ready. Like when I told you I cleared out my account today, I was ready to turn around. Boy, I would put season. I was put my shorts on, man. I
I'm
was
telling you.
ready. But then I saw some stuff. Now, granted, I saw that the market was turning around for a little bounce, but not for 1 second do I think it's going to sustain because it's usually the second move. It's gonna come back down and retest. I'm looking at that 200-day moving average. It's like you said, it's gonna run up, and I think it's gonna go up to about on that QQQ, that Nasdaq index. I think it's gonna run up another $10, hit that 200-day moving average, and shoot back down and come back and retest this same spot. That's why I loaded up on some stuff real quick
Let me see
just
if
to
I can.
capitalize off on. I mean, I'm a real short swing trader right now with some real tight stop losses. I'm just trying to make money on this quick little bounce. After it bounces, it's gonna go up, come back down and hit a support, That's when I'm gonna go in on my long term stuff.
So I know you can see this real quick. This is Tesla
Oh yeah,
right here.
yep.
I just
Boy,
want to show
Tesla
this
look
very
just like the
quickly.
chart I'm looking at right now. The Nasdaq. You see that hammer?
Yep. So this is what I'm looking at. We get a high.
Uh-huh.
We start kind of coming down. Boom, boom, boom. It looks like we get kind of like a wedge. We come right here. We hit a level. We go higher. But guess what we don't do? We don't go higher than before.
Uh-uh.
And then when we come back down, guess what we do? We go back lower than we did before. So imagine what we're going to do next. We're going to go up, but we're not going to get as high as here. And people are going to get excited about this move to the upside. You're going to get a lot of buyers come in right here. They're going to be like, oh man, this is awesome. Let me go ahead and buy this.
Hey, I'm with the big boys now. Say I know not to go against them. 2 years ago, I used to be that person. Like I see all that green, I get in on the back end, and boy, I get my feelings hurt.
I'm telling you,
Yeah,
because I
like when you
mean,
drawing there,
we
I
can
be
see
cat
what's
out.
happening. I mean, I just drew this in kind of roughly, but we can kind of see it's the top coming in right here. If you
Uh-huh.
get in and you buy this, you're taking a huge risk because that thing is possibly going to come back down and we're going to break that 850 next time. And if we break
Uh-huh.
that 850, then, it's going to be a nice little ride
Oh,
down to possibly about 600. So, I mean, we'll have some stopping points before. We're not going to necessarily just go straight down to 600 or anything or 550 or anything, but we're not going to continue to make moves like this. This is
no.
done for. This is done for. This right here was the last move. That's it. That's the last move, like to the upside. I'm not saying that Tesla is going to be something bad and you should get out of it and all this stuff. Because I mean, if you got in at a good little price all the way down here or something, yeah, stay in it because you're going to make some money in the long run, especially if you're thinking about long term. But hey, if you're trying to get
Uh-huh.
something short term, man, no, that's not going to be it right now. That is not going to be it right now.
Man, I be playing that thing from 860 to about 1100 again.
Yeah.
But hmm, I see something that I do not like about Tesla. As a matter of fact, oh man, I'm looking at my moving averages. This right here, all this was a gap fill.
Really, the first move was the gap fill. The second move broke down. Cause see, I'm looking at Apple too, and Apple is sitting on a very critical level right now. If this thing breaks that level, gone. We're going back down to 120. Screw this
I'm playing
160.
with
We're
that.
going down to 120. And we're gonna lose a lot of market cap. Apple is gonna lose a lot of market cap. Why? I mean, it's just the belly of the beast. I mean, that's just what it is. It's gonna move like that because they're getting hit. Tech is getting hit all simply because, hey, higher interest rates.
I think Tesla's getting ready to drop back down again. Yesterday, it got as low as 245. It stopped at 245. I mean, I'm talking about 245. 945 opened up only at 905, dropped all the way down to 855, came back up. So the top part of this where it closed out today at 930, that was coming back in the gap field to close that gap because it closed at that 945 before. I think it's going to come back up and touch that 942 and continue to go back down because I see my moving averages, my 20 is about to cross the 50 going down.
I'm
This
telling you,
right
man.
here is going to mess up a whole bunch of people who think they've been waiting on this move for Tesla. Oh boy.
And the thing
This
is, they just gonna get liquidated, and that's what's
and
gonna
then
call the S&P to go down even more. Cause Tesla is a big weight. Then you
oh,
got Google, you got Apple. All these guys are about to go down. That's a huge weight.
we gonna find out sooner than later. Why? Because their earnings is in 2 days.
Oh wow. Oh,
Hey,
so
what
you
you think they were
Tesla's
gonna
earnings.
report on? Yeah, Tesla's earnings
Oh
is in
yeah, that
two
thing
days.
gonna go
You
down.
think
It's gonna
you
tank
think
out.
they're gonna report on some groundbreaking numbers? Nobody was buying, because the same thing that's been happening with the housing market is happening with the vehicles too, because of the chip shortage. They have
Mm-hmm.
their numbers, their fourth quarter numbers from last year were not like groundbreaking. They can't be.
Mm-mm.
People weren't buying cars.
Mm-mm. They're not.
Yeah,
They can
this
inflate them.
right
They
here
can
was
make
a
them
setup.
seem good. I mean, that's all they're gonna do. And I mean, if you are a Tesla fan, of course, yeah, you're gonna be like, oh no, no, they're doing wonderful. But I mean, in all actuality, when you start looking at the numbers and you do deep dives into the numbers and not just talking, it's not as impressive as they try to make it seem. It's impressive, but it's not like things that have never been done before. Like Ford clears those numbers with ease. GM clears those numbers with ease.
Hey, I
Toyota
bet you
clears those numbers with ease.
the same thing that happened to Netflix is about to happen to Tesla. Netflix is the one that brought the damn market down. Did you see? They just had their earnings. They dropped from 508 to 400 overnight in one day.
Yeah.
And
That's a huge jump. I mean, hey,
their
that's a
share
huge drop. I'm not gonna lie. That is a huge drop. That's
that
20% drop, ain't it?
that right there pulled the market down so much.
That's a bear market move right there, man. That's 20%
Oh
right there.
my God.
Or right at it if it's not.
Let me look at this. Like, how bad did they? Man,
So I'll say
they
this.
beat they beat their earnings. They beat their estimate.
Yeah. And see, that's the thing. Like they'll beat, but see, it's probably something in that report where
Yeah,
they either didn't get the revenue that they needed or they
I read about it. It's the
they
competition.
don't have good guidance.
It's a competition. So their numbers, even though they beat their estimate, the thing was last time around last earnings, all of their projections weren't more than they were from last year, their subscription totals. And that's because before they were saying that they weren't concerned about Disney Plus and Paramount and HBO Max and Hulu or whatever competing with them. They said that wasn't a concern to them, but the numbers, like you said, is you can say one thing, but the numbers don't lie, and the
Exactly.
numbers did not agree with that, and it shows that the HBO Max has cut and Disney Plus have cut into their market share.
Oh, for
Hence, we
sure.
see we see the earnings.
For sure. And that's the thing. Like, you have to be able to adapt. Like when you see your
Mhm.
competition coming out, you can't say, "Oh, they're behind because they're." No, you got to understand that your competition has very, very deep pockets. All they have to
Yep.
do is just go out here and just pay a crew of whoever, and they can get a nice team of some very, very good developers,
Oh
or
yeah, I
if they
mean
need
Disney.
film people, or if they need anything, they can get the best of the best as fast as they need to.
Yeah,
So
if
it's
they can't
like
purchase it, they just go out and buy a whole company. They're like, We're not just gonna hire people. We're just
exactly.
gonna
It's
go
the
ahead and
same
buy
way as
a
trying.
whole sector."
It's the same way as Tesla trying to take on Ford. It's like there's no way you're gonna take on Ford. Ford will swallow you. Like they can buy you multiple times.
That's what I was just telling somebody about these EV cars or whatever. It's like really it's gonna be your Fords and your Mercedes Benz. Me and Heen on the show on Thursday, we were talking about LAZR, which is Luminar, how they just had a partnership with Mercedes,
Mm-hmm.
because Luminar has the LiDAR. We talked
Mm-hmm.
about the LiDAR. Mercedes, they're not gonna go around and fumble around and try to figure out this LiDAR technology. We're going to go to these experts here and we're just going to buy them out, acquire them,
Exactly.
and bring them on board.
And who
And
was
then they've
laser?
already got the
Who was
footprint.
that laser? LAZR. Who was that?
I think it's Luminar.
Okay. Okay. So yeah.
Yeah.
So it's like, I mean, technology, we've been talking about the technology. We've been talking about all this stuff. So I mean, if you got in on anything that we were talking about, or you should be making some money now because we always talk about things that are way ahead of time. Because right now, I mean, like we've been telling you guys to buy banks and to buy industrials and to buy materials. We told you this psh, so many months ago, at least 3, 4,
Yeah.
maybe even 5 months ago. So if you took knowledge, I mean, if you took heed and took that knowledge and did something with it, you could have a lot of money right now. Because we were throwing out when Wells Fargo went down to like 20 something dollars, we were telling everybody that would listen to buy it. Because why
Hmm.
wouldn't you? There's no way that this thing is going to be this cheap again. And with interest rates and all that stuff going up, we know what's happening. We know what's about to happen. And you got to understand that the stock market doesn't wait. The stock market is pricing this stuff in. When we find out, we sometimes may be a little too late, but we're early enough to be able to get in on the move. But it's a lot of people that by the time you've heard it, it's already done. The move has
Yeah.
happened. The investment has been made. The people that needed to talk about this stuff has already been talked to. So their money is already invested. So now they're waiting on their returns to come back in. Like they're
Hmm.
not just jumping
By
in
the
when
time
you
you find
find
out
out.
about it, they are taking profits. They're taking
Exactly.
profits.
Yeah, they're taking their profits because now you're coming in to buy it, and now they got somebody to sell this stuff to because they've been sitting in this thing for I don't know how many months, pray maybe
Right.
even a year or two. So now
That's
you
that's
come
me.
in, and now they can dump it off on you because we've been here, we've been sitting here, like we've been had these things, we've been had
Hmm.
all these shares.
You
We
have
were
to
just waiting
know
on
ahead of
everybody else to
time.
get on so that we could sell it to them and reap the benefits.
Hmm. But you got to know ahead of time, like what is a good price. Like if you don't know this stock, you haven't looking at it. Like you might just jump in the middle of the ocean. You
Yeah.
don't know what's the proper valuation for this stock.
Yeah.
Is it overweight? Is it underweight? Or whatever. You have to know when, hey, this is a bargain. Go ahead and get it. And
Yeah.
sometimes you just have to do that and sit on it because the fact of the matter is, yes, we have technical analysis, but the people who are inside, they're the ones sitting on that information. Any given stock right here, right now, could release some information that they've been sitting on, and the stock just start running up
Mhm.
overnight.
Exactly. Exactly. So I mean, it's nothing from stopping that happening. So that's the reason why we talk how we do because we're always early to the party. We're always early. We're never talking in retrospect. We're never talking about what we should have did because we're always talking about what we're looking at. Because we know that if we look at that, when we do look back, our hindsight is always 2020 because our foresight is 2020 because we know what's gonna happen.
And then if you really know it and you really start paying attention to the market, you're gonna start to realize that the stories, they're not fake stories, but it's
They
just
hit right on time.
right. So it's like crazy. Like the first time it happened, the second time it happened, I was like, wow, I had this just in time. But then I started to realize, like, how can I not know anything about a stock? Go look at my technical analysis and see, like, oh, historically it goes at this point, and then as soon as it hits that point, magically that morning they come up with something about an acquisition, or they talk and they're saying that, hey, we're going to do this new product and this why it was coming up. You knew a long time ago you were going to do this, and this price, you waited until the price got all the way down here to release that information. I mean, it's just it's too convenient.
Exactly.
I
Exactly.
mean, I hadn't got burned too many times. Like when I know like something is a steal, I'm gonna sit on it. And I'm looking at my moving averages, I'm looking at my indicators, I'm relying on my experience or whatever. And sometimes if I feel like I got in too early or whatever, so I don't get burned, that's when your risk management comes in place where hey, I might need to do a tight stop loss on this, especially when we're dealing with a volatile market like what we are right now. Like a year ago, you can just buy some stuff on a resistance point
Hmm.
and feel safe with it right here. there is no safe, support level right now. I mean, it's volatile.
Exactly.
And you see
So I
like
mean, you
that,
just
and
got to
then
know how to trade. You got to know how to get in where you fit in. You got to know your key levels. You got to know how to spot trends. You got to know how to spot levels. You got to know
I
how to
feel
just
sorry
spot.
for
You also just got to know something about the mechanisms of the market. Cause I mean, like,
yeah,
yeah, you can know how to spot a trend or a pattern, but what cycle are we in? Like, no,
right.
you got to know something about the market because yeah, I might see that. Oh, this looks like a channel that's setting up an upward channel. But
It's
knowing that we're in this business cycle now where we're about to take in higher rates, this, that, and the other, and I'm sitting here looking at Apple making this analysis, and I go in and put all my money on this because I'm like, oh, it's gonna bounce off this channel. That's wrong because it's not gonna bounce in this cycle right now. This cycle right here,
yeah,
you're looking to probably short this thing. You'll be waiting to see if this thing is gonna break that channel. You're not waiting to see if this thing is gonna bounce off the channel. If it does bounce, cool. But that's not what you're looking for in this case. You're looking for this thing to probably break down and continue to go lower. That's what your expectation is. But you wouldn't know that because you're trying to trade off just pure patterns and don't know anything else about what's going on.
I was like, I've been trading, I've been looking at this stuff for so long. Like, I, like 60% of it might be like patterns or whatever, but a lot of this stuff, it's like, man, I it's hard pressed for me to see like some kind of move that I hadn't seen before. I was like, oh, I remember I got burned like that. I've gotten burned so many times where I make it a thing to like learn from my mistakes. I
You
told
have
you
to, man.
I have a trade journal in here where I had to learn from, it's just full of stuff where
Yeah,
I sit there and everything that I learn about, I put it in there.
you
So I
have
see
to.
stuff and I'll be sitting at my desk here just laughing about like, look, they think they're slick. They're trying to drop this in, they're raising the prices or whatever. People are gonna jump in. I'm like, this is a false move.
Yeah, there's a lot of games that's played out there, and I mean, if you're aware of it, you can exploit the game because you know how to play the game that they're playing. So I mean, it's not like it's wrong for you to exploit that and win if you know how to play the same game that they're playing. If you can play and if they shooting the ball and you can shoot it too, and y'all
Mhm.
out there looking like the same because they making shots and you making shots too, why wouldn't you go out there and play?
It's
It's not
crazy,
like
man.
it's a different game. Now, if it
I
was
was
something
ready to
different and they,
short the place.
they was once you finally stepped on the court, then they started turning into Michael Jordan or something like that, and they doing some stuff that you ain't never seen before. Then it's like, okay,
You
this,
got hustle.
yeah, you hustling me now, man. You up to no good on this one. But if that's not the case, then why not play the game if you know how to play? I mean, that's just simple. But a lot of that stuff, man, is you just gotta know. A lot of
Yeah.
it is just experience. And that's really what you get when you come over here with us, to be honest, at Hack the Markets. Cause I mean, we that's what we do. We go through this stuff. We actually trade. We don't sit around and talk about stuff. No, we actually go out here. Like, we take bad trades every now and then. That's how you can learn. That's how he said he got that trading journal so he can learn. Like, we don't take we're not 100% accurate because nobody is 100% accurate. And if anybody is trying to tell you that they're 100% accurate, run from
Unless
them
you work for
because
that
they lying.
company, and even if you work for that company, if you're not one of the people who are making the decisions or whatever, you still wouldn't know
And then
about
on
that
top of that,
information.
if you were one of them people, you couldn't act on the trade.
It's called insider trading.
Exactly. So it's like, come on now. So
Mm,
with that being said, you got to know other ways. Like, it's a lot of ways to do certain things. There's a lot of reports that people don't know about. It's a lot of experiences that we've seen. There's a lot of patterns that a lot of people don't necessarily pay attention to. It's a lot of games that are played at the beginning, at the end of the markets that a lot of people don't pay attention to. It's a lot of things that go on that if you understand the mechanisms and how the market works and who the players are, how they make money, and all this other stuff, it makes a lot more sense because it's way more than
Yeah.
just buying a stock and then hoping that it goes higher. The same way as you wouldn't just go out here, you drive by a house and you say, "Oh, that house look good. Let's go buy it real quick. Let call them real quick," and you say, "Man, we finna give you all our money right now, today." Nobody does that. So why would you do that with the stock market?
Hmm. Get
You
in
don't
there and
even know
find
anything
out.
that's wrong with this house, man. It could have
Yeah,
foundation
yeah. I about to
problems.
say you
They could
get in
be
there and find out the
flooding.
foundation crack.
Yeah, that's what I'm saying. Air condition going out, and you got a bad roof, and you over here and paid all this money, made these people move out and hastily, and you inherited all these issues. Crazy. But beyond all that, you got some picks you want to share with the people, or one pick you got to share with the people. To be honest, I ain't
Man,
got nothing. I don't have anything. I thought I had something, and then it kind of like went around me. So I'm like, I don't think I want to share my picks right now.
I jumped. Like I said, I jumped in XP and I jumped in Neo. Now I wouldn't put those for people because I'm playing those on. I'm swing trading them. Neo, I may cut Neo. I'm expecting to cut Neo sometime um tomorrow. I got a weekly option on that one or whatever. I loaded up on it just on this very, very small window that I saw with the market. I'm capitalizing on it, still running up. Um, I'll tell you one that me and he talked about last week. I'm waiting on it, man. It's Snap.
Snap. Okay. I remember you
Now we've
guys were
been
talking
talking
about
about it.
Snapchat.
We've been talking about it. When it jumped off, I'm gonna buy me a T-shirt that say "Snap pays my bills" because that's what's gonna happen. Oh my goodness!
Hey, I forgot I do have one. I do have one.
What you got?
Um, fuel cell, F cell. I like F
Okay.
cell. It is under $4 now. I had told everybody
Ooh.
to keep it on a
Oh,
watch
ooh,
list
ooh.
because I had told people don't buy it. I was still watching it. I had that $4 mark. I think it's like right at $4 a drop, just a little bit
Man, that
before
thing
four
closed
low
at three
$4.
ninety two
Yeah,
today.
392. I knew it was like 390 something. Okay, so that is something that I like. Now I'm still, like I said, kind of holding off on it, but fuel cell under $4. I mean, I like it, so that's my pick.
I told you I, Snap and Pack B. I'm no, those are the ones like we. This is a quick move. I think the market bounced today, and it's gonna go up, but it's gonna go and hit a resistance area, and when it comes back down on that rebound, that's gonna be the real move up. Not this move right here. This is the false move. It's gonna go up and then it's gonna come back. It's gonna have to do a retest, and it's gonna come back. That's when you load up. That's when I'm gonna come back for Pack B, which is at $10 right
Or you
now.
could
And
be
we
risky like me and grab it off the thing, move up, get out, wait for that thing to come back down. Might even short it on the way down because I know it's gonna
hey,
come back up, but I'm not gonna be that crazy with it. I'll buy that thing off that retest and ride it on out though.
boy, I got
I
caught with
won't
my
advise
hand
everybody
in.
to trade like me though, man. You got to be on
Hey,
it.
I do that. I got caught with my hand in the cookie jar last week doing that with Micron, and I should have stayed with my gut instinct.
Yeah,
I
you should
actually did the
always
right
do that,
thing,
man.
got scared, and jumped out because I shorted Micron and I was shorting it. I bought some option contracts on it to short it. It was going down, and all of a sudden the market hit this little small 20-minute support level, went up. I cut it. I said, mm-mm. The next day, this thing went down like $5 more or whatever. Man, I would have made almost
God,
$1,000.
yeah, you would have been up. You would have been up. Hey,
Oh,
it is what it is, though, man. You'll
oh,
be back. You'll be back. Don't worry about it.
I jumped in something else. I'm
Yeah, that's
happy.
what I was about to say. Don't even worry about it. But we
But
do
that's the
want.
thing, though. It's like people will look at the money that I lose, and they be like, "Oh my god, I would never trade again." Like I feel
Yeah,
like if you know what I have learned a skill for life, I could go dead broke and start back and be up with thousands. Like I know that I can make $500 in 20 minutes. I know that. I've done that lots of times before. I'm still learning or whatever, but I know even if I went flat broke on any of this stuff, that I'm skilled enough to be able to do this from stocks, being able to do this from options or whatever. We have the expertise in house with cryptocurrencies, all that stuff too. So I mean, it's like, man, when you get skilled at it, like it's, yeah, you are going to get burned a couple of times. It's just like a even the greatest cornerback in the NFL, you're gonna get burned. But you got to come back out, and just play the next play, and that's where risk management comes in. You get burned, but
You're
you're
not
gonna be
losing
able to
it
come
all
back from it.
because
Yeah,
you
yeah,
you got the
you
risk
can't bet.
management in play. You'll lose, but you're not losing it all.
Man, you remember me when I first started, man? I bet the house and everything in
I
two
already know.
seconds.
I already know. It was hilarious. It was fun to watch. I say
Oh
that.
my god!
Might not have been
Ding
fun for
ding
you, but it
ding
was definitely
ding
fun for
ding.
me to observe.
But the funny thing is, it's like I don't put money in the market that I can't afford to lose. So
Exactly. That's another key.
I'm not gonna go in and put my mortgage money up in the market or whatever, and then to go down, and then I can't pay my bills. Like no, like every single dollar that I put in, that's like play money for me. I'm prepared to lose it all, and I'm still gonna be walking and puffing on a cigar or whatever. It's all house money to me.
Yeah.
Cause I know, like I'll be up 2,000 one day, go down 500, make 4 or 5 grand in a day or whatever. But I'm learning, but I know that it's a marathon now. So instead of going for those lottery ticket picks that I used to, now I'm more so looking into, okay, how can I sustain this? How can I make $200 a day? How can I make $300 a day and then turn that into $1,000 a week, $4,000 a month? How can I have this stock market supplement my real income and start to pay my bills or whatever? Now I'm starting to get the big picture of
Hmm.
it all. I can still come back and do, the options every once in a while, but it's more to the market than that.
Yep.
I had to learn that the hard way, but I'm
But you
here now.
learned, man. But you learned. A lot of
Oh
people
yeah,
don't
oh yeah.
learn that, man. A lot of people don't. But good thing that you did. But we
Hmm.
do want to encourage everybody to head over to hackthemarketstrading.com. Over there, you can set yourself up a free trading account, or you can set yourself up the premium account. Of course, we're going to tell you to get the premium account because that's how you get a chance to interact with us. That's how you get a chance to pick our brains,
Yep.
see what plays we got, get all the analysis that we're doing, all the research and all that good stuff like that. Definitely like us on Twitter, like us on like the Facebook, follow us on Twitter, follow us on Instagram, and subscribe to the YouTube channel. Like it, subscribe to the channel, share it with your friends, let everybody know because that's how we can get the word out. Plus, we can also get the algorithm to like us so that more people can see the videos too. And I see we went to space over here with
Hey, you see me when that light come on? Soon as we get off here, I'm about to get my calculator out because it's
Oh,
gonna be payday for me in the morning.
yes, sir. Okay, I'm about to call you Jazzy J over here, boy. Look at this man right here. Grandmaster J over here. So until next time, people, we'll see you guys on Thursday. I think it'll be just us two again, but we'll be here giving you guys some good
We gonna hold it down. We
information.
gonna tell you if we lost everything or if
Yeah, I
we
ain't gonna
gonna be
tell you if I
buying
lost
new
everything, though. I'm
cars.
gonna lie.
Hey,
I'm
I be
just
like,
playing.
hey, I'll be back. Payday come in about 4 days. I'll be back slanging.
Until then, no people, we'll see you guys. Hopefully, you have a good day and you'll have a good week trading.